Good day. I just bumped into our chief strategist, Izak Odendaal at Old Mutual Wealth, and there's been a lot of noise in markets as of late. We saw sell-off in US markets, and actually in global markets, there was almost no place to hide at the moment. Izak, is this an emotional reaction? Is there anything fundamentally wrong, I guess, in world economies? Are we just seeing tech stocks selling off? What has caused all of this market turmoil, all its uncertainty? And is there any reason for us to panic, do anything, or do we just take our hands, sit on them, and wait for the storm to pass? Your views?
Yeah, so I think there are two things that's happening. The one is you have concerns around US economic growth slowing down. And I think that's the more important thing to talk about. So we'll get there in a minute. And then the other thing is you had a whole bunch of trades in the market that were very, very crowded. So I keep using the analogy of a boat. And if you think about a small rowing boat and everybody suddenly moves to the one side of the boat, it doesn't really matter what causes the boat to wobble, but it is going to fall over. And that's what we saw in the last couple of days. So if you think about, US tech stocks, very crowded trade, and extremely high valuations. If you think of the Japanese market that really suffered perhaps the biggest declines, down 12% on Monday morning, or the one Monday morning. And, that was part of this whole yen carry trade where people borrow in very low Japanese interest rates and then invest elsewhere. And there are other things that have also been very crowded trading, so-called volatility selling strategies. We don't need to get into detail there. But essentially, this is very much a market event. This is very much selling, feeding on selling. The economic side of things, I think, is more important for us to focus on, because the market volatility should calm down, provided the economic backdrop remains positive. So what is the economic backdrop? So in the US, we've seen slower growth. We've seen the labor market starting to slow. We've seen unemployment ticking up. I think that's all fairly natural because you had a period of very strong growth. And that by itself is not reason to get too worried about. But we need to keep an eye on whether, for instance, the slight rise in unemployment becomes a big rise in unemployment, because these things can feed on one another, right? So obviously if one person loses their job, they spend less, that impacts the next person's income, potentially snowballing. I don't think that's where we're headed, but it's obviously something that we need to keep an eye on, and obviously the risks have increased in recent weeks. The good news, insofar as there is good news, is that it definitely points us to interest rates coming down. Okay, so, and I don't think the Fed, the US central bank, is going to respond to this market weakness immediately by cutting rates, but they have a meeting scheduled in September, and I do think that is going to be the start of a cutting cycle from the Fed, and that then also feeds into cutting cycles by other central banks, including our own Reserve Bank. It does give them all space to cut interest rates.
Yeah, it almost feels like we're all waiting just for them to point to the fact they will start cutting. I think the market's almost priced in. I think it's almost gotten to 75 basis points now, was the latest that I saw. Izak, if I'm an investor with, maybe I've got a 50-50 split between local and global, is our view at Old Mutual Wealth still that offshore markets are slightly overpriced? Were we expecting a correction? I mean, I don't think it's fair to say you can expect double-digit returns, 20-30% year on year. At some point, there has to be almost a regression back to the norm. And is it an opportunity for us to say, well, maybe emerging markets are looking more attractive? What's your view from an asset allocation? What's our view from an asset allocation perspective? Do we think now is the time to say, look, it's a sector that's really dominated the US S&P 500 by 7 stocks. Maybe it's a little bit overweight to the one side. Or do we still think, look, there's other 493 stocks that could still offer value? Don't completely get out of US stocks, sit it out and just wait out. Or is it more time just for emerging markets?
So was a correction inevitable? The reality is you can't time these things. And corrections are going to happen. And as you pointed out, there was a very strong run in US markets. So it was going to happen at some point. I don't think that by itself is reason to be worried. I also don't think that's necessarily a reason to change our asset allocation view at the moment, right? So just because the markets fell by couple of percent doesn't mean you want to make big changes to asset allocation. So yes, I mean, US at a headline level still looks expensive, still very much dominated by those big 7 tech companies. I think if you drill deeper into the US markets, there are definitely better opportunities, including smaller companies, and ditto for the rest of the world, including the emerging markets, and very much including South Africa. And I think it's notable that in this whole period of volatility, South African markets have actually been fairly resilient. Typically, when there's a period of stress in financial markets internationally, South Africa is one of the first things that fall because we are such a highly traded market. The rand specifically is such a highly traded currency, and the rand has been pretty muted. It's been sort of up 1%, down 1%. I'm hoping that tells us something about shifting perceptions towards South Africa. Now that we've kind of got our economic reform story underway and so on. But in a nutshell, I mean, should we respond to this? No, I don't think this is an event where investors should now go out and make big changes to their portfolios. I think the question you have to ask yourself is, am I in the right asset classes for my longer term strategy? And if I'm not in the right asset classes, then that is much more discussion around my own financial planning needs rather than a discussion around day-to-day market volatility.
And I think when we see these market movements, we're all still human beings. And human beings are the worst at investing because we are, in fact, emotional beings. I think you hit the nail on the head. Right now is a good time to look at what is my asset allocation, which has been put together by my financial planner and potentially my portfolio manager. Is that applicable for me, for my long-term goals? And then let markets do what it will do inevitably. We always see them come back to the norm. It's nothing to be overly concerned about. And if I had to almost summarize what you're saying is, nothing has happened out of the norm of what we would expect. It's normal. We've seen normal market movements, and this may just be 12 months that would be more volatile because there's a lot happening in the world at the moment. Rates are very high. We're still waiting for the outcomes of the US election. So we do expect, would your view be to say we are expecting some volatility in the short term, but nothing's broken at this point in time?
I don't see anything that's broken. I think volatility, especially as you point out, with the coming US election, with the rate cycle now turning, I think some volatility would be due. Obviously, some of the events we saw in the last few days have been a little bit more than normal. But the bottom line is markets do experience pockets of volatility. That in itself is not reason to worry.
Awesome. I think to sum it up, thanks Izak for popping in for some coffee. There's always going to be winners and losers, and more than not, the people that are the winners are the ones that stay invested in the long term, don't panic in the short term, and that in itself leads to inflation beating returns. I'm just for one quite comfortable that we have a team at Old Mutual Wealth, a research and investment team. Izak is part of the team that's looking at this on a daily basis, so I don't have to keep on looking at it every single day. Izak, thanks for popping in. We look forward to chatting to you again in the future, and it's going to be an interesting couple of months ahead.
Thanks, Tiaan.